don't get wrecked. Nickely, it's time to connect.
The Moonshot Dispatch.
Nick and Lee, tune in. Tune in. Screens lit up at dawn, or the book alive. Candles flicker green and red in the fight. Nick calls the numbers, Lee reads the pace. Every tick a clue, every move a chase. Hold that breath, watch it swing. One more push, one more ring. The room goes wide, the chat blows up. Nick and Lee, don't let up.
The Moonshot Dispatch. The Moonshot Dispatch.
Nick and Lee on blast. Nick and Lee on blast. We ride the spikes, we chase the spark. The Moonshot Dispatch.
Right from the start.
Whales make waves again, but stack then fade. Sharp little fake outs cut through the trade. Lee says, look there, Nick says, now here. Fresh on the tape and the signal's clear. Hold that breath, watch it swing. One more push, one more ring. The room goes wide, the chat blows up. Nick and Lee, don't let up.
The Moonshot Dispatch. The Moonshot Dispatch.
Nick and Lee on blast. Nick and Lee on blast. We ride the spikes, we chase the spark. The Moonshot Dispatch.
Right from the start.
Wait for the turn, there it goes. Pulse in the chat, head to toes. Higher, higher, lock that view. Nick and Lee, pull us through.
The Moonshot Dispatch. The Moonshot Dispatch.
Nick and Lee on blast. Nick and Lee on blast. We ride the spikes, we chase the spark. The Moonshot Dispatch.
Right from the start.
Yeah. Login camera hot, chat scroll, screens light up. Nick on the mic like watch this. Lead with the chart, not luck. Candles move like wild tides. Green prints, then they snap red. We read the room in real time. Every tick got a new thread. Hold up, hear that room go loud. One more swing up, we can taste that cloud. Hands on the wheel now, eyes on the feed. If the line keeps climbing, that's the news we need.
The Moonshot Dispatch.
Run it live, run it back.
The Moonshot Dispatch.
Nick and Lee on the track.
The Moonshot Dispatch.
See it rise, see it snap.
The Moonshot Dispatch.
Chat goes wild like that. Fresh alert, new candle volume, hit whole screen shakes. One more push through the room or one more move for the brave. Nick says, no, don't blink now. Lee says, check that wall. We got the crowd on standby, waiting on the next call. Every game got a heartbeat, every dip got the grin. If the market wants fireworks, we'll be first ones in. Hold up, hear that room go loud. One more swinger, we can taste that cloud. Hands on the wheel now, eyes on line keeps climbing. It's the news we need.
The Moonshot Dispatch.
Run it live, run it back.
The Moonshot Dispatch.
Nick and Lee on the track.
The Moonshot Dispatch.
See it rise, see it snap.
The Moonshot Dispatch.
Chat goes wild like that. When the dust gets thick, we keep it clean and sharp. When the crowd gets hungry, we light that spark. Nick says stay locked in, Lee says stay awake. If the moon comes calling, we don't hesitate.
The Moonshot Dispatch.
Run it live, run it back.
The Moonshot Dispatch.
Nick and Lee on the track.
The Moonshot Dispatch.
See it rise, see it snap.
The Moonshot Dispatch.
Chat goes wild like that.
The Moonshot Dispatch.
We don't miss, we don't crash.
The Moonshot Dispatch.
Catch the wave, then dash.
The Moonshot Dispatch.
Nick and Lee.
Tune in. Screens lit up at dawn, or the book alive. Candles flicker green and red in a fight. Nick calls the numbers, Lee reads the pace. Every tick a clue, every move a chase. Hold that breath, watch it swing. One more push, one more ring. The room goes wide, the chat blows up. Nick and Lee, don't let up. The Moonshot Dispatch. The Moonshot Dispatch. Nick and Lee on blast. Nick and Lee on blast. We ride the spikes. We chase the spark. The Moonshot Dispatch. That's right from the start. Whales make waves again, bid stack, then fade. Sharp little fake outs cut through the trade. Lee says, look there. Nick says, now here. Fresh on the tape and the signal's clear. Hold that breath, watch it swing. One more push, one more ring. The room goes wide, the chat blows up. Nick and Lee, don't let up. The Moonshot Dispatch. The Moonshot Dispatch. Nick and Lee on blast. Nick and Lee on blast. We ride the spikes. We chase the spark. The Moonshot Dispatch. Right from the start. Wait for the turn. There it goes. Pulse in the chat. Head to toes. Higher. Lock that view. Nick and Lee.
Pull us through.
The Moonshot Dispatch. The Moonshot Dispatch. Nick and Lee on blast. Nick and Lee on blast. We ride the spikes. We chase the spark. The Moonshot Dispatch. Right from the start.
Logging camera high, chat scroll, screens light up. Nick on the mic like watch this. Lee with the chart not look. Candles move like wild tides. Green prints, then they snap red. We read the room in real time. Every tick got a new thread. Hold up. Hear that room go loud. One more swing up, we can taste that cloud. Hands on the wheel now, eyes on the feed. Hit If the line keeps climbing, that's the news we need.
The Moonshot Dispatch.
Run it live, run it back.
The Moonshot Dispatch.
Nick and Lee on the track.
The Moonshot Dispatch.
See it rise, see it snap.
The Moonshot Dispatch.
Track go wild like that. Fresh alert, new candle. Volume hit, whole screen shakes. One more push through the rumor. One more move for the break. Nick says, don't blink now. Lee says, check that wall. We got the crowd on standby, waiting on the next call. Every game got a heartbeat. Every dip got a grin. If the market wants fireworks, we'll be first ones in. Hold up, hold up, hold up. Hear that room go loud. One more swing up, we can taste that cloud. Hands on the wheel now, eyes on the feet. If the line keeps climbing, that's the news we need.
The Moonshot Dispatch.
Run it live, run it back.
The Moonshot Dispatch.
Nick and Lee on the track.
The Moonshot Dispatch.
See it rise, see it snap.
The Moonshot Dispatch.
Track goes wild like that. When the dust gets thick, we keep it clean and sharp. When the crowd gets hungry, we like that spark. Nick says stay locked in. Lee says stay away. If the moon comes calling, we don't hesitate.
The Moonshot Dispatch.
Run it live, run it back.
The Moonshot Dispatch.
Nick and Lee on the track.
The Moonshot Dispatch.
See it rise, see it snap.
The Moonshot Dispatch.
Track goes wild like that.
Moonshot Dispatch.
We don't miss, we don't crash.
The Moonshot Dispatch.
Catch the wave, then dash.
Lee and Nick with the moonshot flow. Dispatch live, let the market glow. Crypto vibes where the numbers show. To the moon we go, let the podcast blow. Digital coins, we dissect them quick. Blazing insights, Lee and Nick. Price prediction sharper than a sword. Macro games, we break the board. The Moonshot Dispatch, hear it loud. Crypto news making waves in the crowd. Stack your sats, let the market react. Stay ahead as we plan and enact. Volatility flips, we call the game. Market cap moves, never the same. Blockchain buzzing, the future's tech. Analyzing trends, keep it all in check. Dollar signs, the charts align. While the bulls and the bears intertwine. Fed talk rates climb or decline. We decode the nodes, it's all by design. The Moonshot Dispatch, hear it loud. Crypto news making waves in the crowd. Stack your sats, let the market react. Stay ahead as we plan and enact.
Hey, the Moonshot Dispatch live and direct. Crypto markets and TA intersect. I got stack them bags high, don't get wrecked. Nick and Lee, it's time to connect.
The Moonshot Dispatch is back again. We're frantically watching Jared be frantic. He said he's had everything ready, but there we go. It wouldn't be the beginning of the Moonshot Dispatch if Jared wasn't fiddling around with some dials. All right, this week it's not been great. Let's be honest. We are down, not just because Jared didn't nail the start of the dispatch. We're down 7.8% on Bitcoin, man. And Saylor has sold. ETH is down. Well, used to that. Fear and greed, 29, whatever. You know what's crazy? Actually, this week, this is the odd part. The NASDAQ so the S&P 500 and the NASDAQ are both hitting record highs simultaneously. By crypto week hitting the skids.
Yeah.
Now, look, I've prepared a story about this, and I know we're going to talk a little bit about the Shiller P ratio, which everybody wants to talk about. Everybody, including a special guest today. Actually, no, he's got something better for us. Skynet, actually, the main thing I want to introduce today is we have Skynet. So Skynet is a regular contributor to this show, particularly in the comments. Very knowledgeable chap, particularly in crypto, and we're really excited to have him here. But before we go across live and ask our Skynet a few questions, I just want to remind us all, the Shiller PE. We all want to know about it. We all know what it is. We all love it. But we are going to spend some time, drill into it. What is it? What it's all about? Because it actually is going to be a repeating theme for today. And once you get to the end of this episode, you will also be just as excited about the Shiller PE as we are. Importantly, the Shiller PE is currently at 42.78. Now,
You built this thing up so much. Anyway, please continue. I want to hear more
never
about
have you
this
ever been so excited for a
specific
ratio.
number. I mean, it is a good number. 42 is a great number.
42.78.
Yeah, I'm
now,
saying 42. That's a good number. So at least we got that.
Closer to 43. But just keep that number in mind. It's going to come back and it's going to have particular significance in a moment. Now, all right. Live cross. Skynet, are you there?
Good afternoon, gentlemen. How are you guys?
Your headphones.
What does Jared will do? What?
Can you hear me, guys?
Yes, we can.
All right, we can hear you, yes. Welcome.
Okay. Thanks.
Where have you been for the last few weeks, actually, Skynet? We've missed you.
Yes, I was traveling in Japan, so whenever you did your live event, I was watching it the next day, unfortunately. So no commenting from me.
Well, I mean, Japan does have internet. And
Yes.
No, I'm just kidding. I'm kidding.
Shame on me.
Yeah, surely this is the most important part of your life, watching this.
It is.
No.
It is. Well, the markets are down, but your audience seems to be going up, so that's a good thing.
Yeah.
Thank you for noticing that. We were actually surprised. We just assumed our audience tracked the market, which was not a good sign, but here we are. So Skynet, it's great to have you along, and it's really great to have you contributing. I think the plan was today we wanted to have a quick chat to you about Hypermarket, because one of the bright spots in the market, absolutely right now, has been Hyperliquid. The team over there seems to be kicking goals, and what they're building seems to be pretty significant, and it's getting a whole bunch of... I've got some questions around, I guess, the regulatory clarity, but also just maybe some technical side of things. Do you want to should we start there?
Sure. I'm not really the correct user demographic for Hype. I'm not a trader. I'm more of an investor, long-term holder. But I have friends who trade and they use Hype, and when I ask them aspects that they like about it, it's all the things you've already heard: speed, performance, 24/7, access to real-world assets. I think is probably the newest aspect of it. A lot of people trading the SpaceX IPO.
Yeah, I think that's a really interesting sort of aspect of what Hype is allowing us to do these days, which is trade these things that we couldn't previously trade. Something like the SpaceX IPO, good luck getting an allocation kind of thing. You need to be a pretty big player. And you can sit there and degen your way in with $100 of USDC and, have a go, which I think it's this real democratization of those kind of markets that previously were locked away for a lot of people. I think that's one of the big things. I know, so as far as I know, like the SpaceX and the RWAs and all that kind of stuff isn't actually on Hyperliquid, itself. It's on one of those HIP3 or HIP4, I'm forgetting now, markets where they kind of, it's like something, something is built on top of Hyperliquid. So like Trade XYZ or whatever might be one of the platforms where you can do a lot of this kind of degen trading. And I wonder if we look 10 years down the track and assuming Hyperliquid's still around, it's going to be a case where the actual Hyperliquid markets are kind of small, and it's really everything that's been built on top of them that has just captured the imagination of everyone and captured the mind share and captured people's dollars. And people you might not even know you're trading on Hyperliquid. You're just trading on some platform which is awesome, and you can use crypto to get involved.
Yeah, I think they've somehow found to generate a flywheel during what's otherwise a gets more attention because the usage, they have a buyback function for Hype, and that pumps the price up
as more usage goes along. And it's sort of this flywheel between buyback, attention, more usage.
Yeah. Do you know anything about the buybacks? Because I know it's like, Hyperliquid, the Hype team didn't invent buybacks, right? There's been a lot of protocols that have done it in the past, and a lot of them have sort of gained flack for it, mainly, I'm guessing, because, people are sort of suggesting, look, you're doing buybacks, which is nice if you're just trying to pump the price of this token, but really we want you to be investing this money into making the protocol better, kind of thing. And so it hasn't been, this all-encompassing, up-only kind of mechanism. It hasn't worked out that well for a lot of other tokens, whereas for Hyperliquid, it's a real selling point. As you say, it's one of the first things you mentioned. I know, I think last week we spoke about it, they're doing something like 97 to 99% of the revenue, the platform fees that they earn are just going straight back into buying Hype.
Yes.
Why is it different? Do you have any thoughts on that?
I'm not entirely sure about their exact buyback mechanism and whether it's published. I'm sure it is, but they're doing meaningful percentages of centralized exchanges as a decentralized place. So it's kind of kills off the old DeFi, which was you'd have to trade off between performance and self-custody. This seems to be somehow straddling both those worlds, where it gives you performance and self-custody. So, sub-second finality, it's its own layer one on-chain order book. And it's not just Hype that's kind of catching a bid, this whole idea of decentralized perps, because it has competitors like Asta and Lighter, and those two are, if you look at the charts of those projects, they're doing similar things, just not at the same scale as Hype.
Yeah, right.
So the market seems to be interested in this idea of a decentralized perp exchange.
Yeah, okay. I did read something about Asta the other day because I'd kind of forgotten about it. I know, back in the day when we first started talking about Hyperliquid, Lighter was, a big competitor. Then we had the October 11 flash crash or whatever they're calling it, and Lighter and Hyperliquid had very different kind of ways of liquidating, or at least
yes,
it seems that way. And so there's a lot of chat about that. Lighter sort of got into the mind share at that point, but I really haven't heard anything about it recently. And to be honest, I thought Asta, I didn't realize Asta had been doing well. I haven't been checking the price. I think I do own some Asta, actually. I might have bought some.
Yeah, I've got some.
At the beginning, I'm assuming I'm like 80% down, but maybe I'm not. Maybe I'm rich now, and I need to go and check.
I haven't been able to log into a few accounts lately. I just haven't. I shouldn't say I'm not able to, I just haven't.
Yeah, you've decided not to. Yeah, fair enough. It's good for your mental health.
Correct.
What do we got here?
Quick comment from the comments. Oh, look, we've got a new camera. Back to eating ramen, guys.
Back to eating ramen,
Oh,
yeah.
It's tough out there. It's tough out there, folks. Stay safe. Skynet, well, first question, how well have we captured your likeness with this image of you? I imagine it's pretty close.
Yeah, Jared asked for something to put on the screen, so I thought I'd, instead of just being the T800, I'd put on a skin suit. And I chose Braveheart as a skin suit.
Yeah, makes sense.
Yeah.
Yeah, and okay, so back to sort of the Hyperliquid discussion. They seem to be moving or making a gamble on moving into the prediction markets as well, taking Kalshi and the like, head on. What do you think about that move?
Yeah, there's actually a crossover topic here, which is the Michael Saylor selling, or strategy selling their Bitcoin this week. There was a market on Polymarkets for that exact outcome, and you could bet on the particular dates. And the one specifically that was meant to resolve to yes has actually resolved to no, and it's under dispute at the moment. So technically, he sold those coins in the last week in the month of May, which you would think the yes would have won out. But now it's under dispute, and it's going through a stress test of how well is this decentralized external oracle with a voting governance system going to be applied. And I think this is where if they don't handle that correctly, the Hyperliquid HIP4 markets, which is the part you're referring to, where you can generate essentially a poly market on Hyperliquid. it might be where people put their faith in.
I'd be interested to know if the Hyperliquid betting markets had the same, the same bet, the same market, and whether it, resolved correctly or not. But this is something that's always interested me, how like something that's open source has to be anchored to real life in some way for these betting markets. You have to have you can be as decentralized as you want, but there's got to be some kind of central authority almost saying, this happened and we agree this happened and therefore these people won and these people lost, kind of thing. Yeah. And now we're going through this, as you say, this sort of dispute process where Polymarket said one thing and a bunch of people were like, nah, that's bullshit. I won, I didn't lose. And now how do you get your money back? Like, who do you sue? Because Polymarket's not available, and we can't get in Australia, you can't get in the US. It's a lot of places you can't actually. So I'm guessing if you're in Australia, you can't really sue them because you're not supposed to be using them in the first place.
What's to stop Saylor himself from going, okay, I'm gonna sell on June the 3rd and put all the bets on himself?
100% insider trading.
Okay.
Nothing's to stop him. Nothing can stop him. However, obviously, if this market was regulated, and even if it's not regulated, he could be, he would be investigated for fraud, basically. So the courts, someone would sue him, and the courts would say, look, you've clearly tried to manipulate markets here.
Look, this seems to be part of the bigger question that we're sort of seeing now, not just for Polymarkets. Like Hyperliquid, has thrived really in an offshore, unregulated market, as have all these platforms. The bigger question to me at the moment is like, how is this going to cross over into a regulated environment? We just saw the CFTC come out and approved regulated Perps on Coinbase and everything like that. So how does that affect these kind of projects and their crossover into this more regulated world for this kind of issue?
I mean, Hyperliquid, there was some news recently, and honestly, I didn't look at it too much. Maybe Skynet knows more about it, but there was some regulatory stuff coming through where the governments were looking, like the US government was looking at doing something with Hyperliquid, and everyone was like, "Oh, that's it. It's done. It's all over." No, it's all over. People were saying, "No, it's they're going to get regulated into obscurity, kind of thing.
Okay.
They're not going to be able to do anything." And I think the price of Hyperliquid was like $57 at that point, and here we are at 75 or whatever we're at now. So it clearly wasn't a problem, and it turned out, as you say, it was a productive thing for the Hyperliquid token. Do you know anything more about that one?
Yeah, I think what you're referring to is when people were reading the details of the marked up Clarity Bill, and part of the qualifications for something that would be approved by the Clarity Bill is decentralization and meaningful decentralization. So there's some wording or sentences in there about the ability to roll back chains and the number of validators and governors. So on Hyperliquid, if I'm not wrong, I think it's 24 or 28 validators that control the entire process. And so I think under the language that the Clarity Bill went through under or passed, it was it would not qualify because it's not sufficiently decentralized enough. And in fact, I think it was only 2 networks that actually got the tick, Bitcoin and Ethereum.
Yes, I do remember that. I think we spoke about that one last week as well. Obviously, you wouldn't know because you weren't listening last week. Well, I suppose you listened afterwards, so I can't really have a go. You weren't listening live. But,
I listened the following day to keep your stats up.
Yeah.
Thank you.
All right, you're doing your part. I get it. Yeah, we talked about that last week, how sort of Bitcoin and Ethereum seem to be the only 2 that actually showed up. Bitcoin obviously is, this, as far as we're concerned these days, like a store of value type crypto. Ethereum was the only one that has smart contracts and you can do like real fancy finance stuff on it. So really it was in a bucket of one, like of these networks that actually got the green tick. Hyperliquid, in my mind, is certainly not decentralized. Like to get these crazy, as you were talking about before, this sub-second finality and amazing stats that allow you to do on-chain liquidations and all these fancy things for perpetuals markets, which we'll talk about later. You kind of can't really have a fully decentralized system because it just can't. They're not. It's almost the blockchain trilemma, right? You can't have one thing. You can't be awesomely fast but also extremely decentralized. You just something's got to give, and we don't. Hyperliquid have done a good job at trying to get the tech there, and I'm guessing like any crypto project, and I don't know the details of this, but I'm assuming they're roadmap has, further decentralization that they're planning on bringing out. They probably have some 3 of 7 multi-sig that underpins the whole thing. Now, I'm guessing about that, but it doesn't surprise me that they didn't tick the box of being decentralized enough, because they are fully centralized.
They have a very relatively small validator set. Okay, well, the bigger question then, or did I say bigger question? A bigger question is, so Hyperliquid has undoubtedly been the standout performer. Certainly this week, it's up 20% or something this week.
Incredible.
And everything else has, what the bed, and then some. And I guess the question is, does, Hyperliquid, or, does its success genuinely represent, I think I even put this question down, a shift towards on-chain financial infrastructure? Or is it just simply a market darling?
No, I reckon absolutely shifting. I think we're seeing a lot of the traditional finance sort of regulated entities paying attention to this and going, oh crap, we've got to do something, because these guys are going to eat our lunch. And they are eating, Hyperliquid's already bigger than Coinbase from memory, in terms of trading volume. So these guys have got to pay attention. There's no we can ignore that anymore. They're just too big. They're doing way too much volume. There's so much interest. People are actually able to trade what they want to trade. If you want to buy, you can, now with the RWA stuff, it's not just these crypto people who can get involved. You can buy real, you can buy uranium or copper or whatever. You can buy all this other, real world stuff on there and take a position in some kind of asset class that has nothing to do with crypto. All you're doing is using the crypto rails, which is kind of the thing, crypto guys have spoken about for probably a decade now, where, the idea is you'll be using crypto, but you won't even know it. Well, this is the step one. You're dipping your toes into that arena where you're starting to use crypto for stuff that has nothing to do with crypto. At the moment, yes, we absolutely know we're using crypto for it. You've got to send USDC from your MetaMask wallet or whatever. But it'll become a time when you're trading on this stuff, and you have no idea, because Ethereum, and again, I've harked back to this a few times. Ethereum have all this great technology that allow you to do amazing things like account abstraction, and you can end up with some kind of software on your computer and you have no idea you're using crypto, because it's all just so well abstracted away from you.
Yeah.
And yet, you're actually trading on Hyperliquid, but you have no idea.
Yeah. So what are your thoughts on that, Skynet? I mean, again, I guess just to repeat the question, I mean, given Hype's standout performance, do you think this is a genuine shift, or is it just a market darling catching a bid for the sake of?
Yeah, I tend to agree. I think it is a shift, but I guess I'd put the question back to you, because you would have customers who are like me, who just buy assets to just hold them long-term storage for savings and that sort of purpose. But a portion of your customers are probably dual users. They use Hyperliquid to degen and to trade and to get access to things that they just wouldn't normally have access to, like oil. I remember when Hyperliquid was all over the timeline when the Strait of Hormuz closed, and everyone was making bets either way on which way oil was going to go. And slightly before that, I think you mentioned the uranium trade as well. People were sort of looking at how data centers and all these other infrastructure are sucking up electricity, and they assume that the downstream effect of that is we're going to need to turn on a lot more nuclear generation. So they're betting on just straight up raw commodities. But I don't think people even know what they're doing when they're on a perp exchange. They're not buying the underlying asset. They're just buying a price exposure, and they don't care. Yeah. So you have this sort of two worlds where there are people that are in it for decentralization and self-custody, and they store all their assets on a Trezor or a Ledger or something like that. And then you've got the people who will use Hyperliquid, and I don't think the majority of the people on there care about any of that stuff. They care about speed, performance, price, and access to markets so that they can trade. But I guess the question is back to you. Do you have customers that say the reasons why they would be using Hyperliquid?
Yeah, I don't know. I actually haven't spoke. We do have, so I do a bunch of stuff on the OTC desk as well, and we definitely have a bunch of interest in Hyperliquid. Something I've been noticing, like one of those on-chain metrics is how much of an asset is stored at exchanges and how much gets withdrawn from exchanges, and generally when for example, like if there's a lot of Bitcoin at an exchange, people equate that or liken that to people wanting to sell. So a lot of Bitcoin at exchanges, a lot of Ethereum at exchanges is not a good sign usually. And when the exchanges have low Bitcoin and Ethereum, then usually that's sort of suggesting that people are looking to hodl and not looking to sell, which is generally a good thing. Something I've noticed recently is we have been a net accumulator of Hyperliquid on our exchange. So we're constantly, our hot wallet constantly getting too full, and I'm having to like send more and more to our cold storage because it's just people just keep buying it. And my theory is that it's not that people are bringing it on to sell because the price just keeps going up and up and up. It's more that people are buying it, and I guess our market makers are having to bring more and more onto the exchange because they're selling to our customers. And the customers don't withdraw because it's an asset they want to hold. It's not really a productive asset. I think you can stake Hyperliquid and earn a little bit of yield, but it's a bit more difficult. So most people just are looking to get exposed to the price.
The other obvious thing is that it's just a bright spot in an otherwise dreary market. And so it's obviously going to attract like flies or moths to a flame. There's a few little pockets of themes that are doing the opposite of the broader market, privacy being one of them. Zcash seems to be doing pretty well. So you get these sort of little small pockets of positivity when the majors are down, which is interesting.
Yeah, well, I was looking at this as well. So Bitcoin dominance is down recently. And, I guess superficially you could look at this and say, okay, it's, why is Bitcoin dominance down? Everything's down, but is it just, the hypes and the Zcashes of the market that are really holding up the altcoins? And it's Bitcoin, and it's just not going up as much as Bitcoin or it's going up much further than Bitcoin is, obviously. As far as I can tell, it's probably not that simple. So yes, Hype and Zcash are doing some amazing things, especially in this kind of market. But it seems like a lot of people are moving from, so Bitcoin dominance is down, which kind of suggests that alts are doing better than Bitcoin. I don't think it's that alts are doing well. I think it's just they're not doing as poorly as Bitcoin. But it also suggests that people are moving from their alts and their Bitcoin into stable coins. And in the bottoms of the bear markets, when things are not looking good, people exit their stable coins into the fiat system because they're like, I'm done for now kind of thing. But we're not really seeing that. It seems like a lot of people are just exiting the risk assets, going into the stable coins and just sitting there. And it's like they're holding on to this, dry powder. And so that, in my mind, is kind of good news in a way. Like it's a pretty crappy market. But
I'm glad you raised that point because I have a story for you, which ties back into our favourite ratio of all time.
Go on.
Shiller P. No, not now. I'm saving it.
Oh no, that's kind of my point. It just seems like people aren't really exiting the stablecoin because stablecoin market, as we all know, is going from strength to strength. It's really booming.
Look, I was going to use that as a segue, but I realised we've got some comments, so we need to take a segue via the comments. Okay. So Skynet, in fact, this week you can help out with the comments because I'm sure you probably know about this as well. Jared, I think there's a comment there. I can't quite see from who. It says any word on Paul Stortz? Oh yes, with the Bitcoin fork, someone was paying attention. This is unique. Stortz fork.
Hey, eCash.
All right.
Any thoughts on eCash, Skynet?
No.
No?
I don't know anything about it. I haven't read what it is or what is.
So
I know the
eCash,
basics that you've mentioned before, but
yeah, sure.
Yeah.
All right. No, I don't think there's any word on the eCash Stortz fork. I've never heard that name before, but for those who don't know what it is, essentially eCash is this fork of Bitcoin that this guy Paul Stortz is proposing. Paul's not just a random guy who's like rocked up and said, you know what, I see what you're doing here and I can fix it. He's been around for a long time. He's been in Bitcoin for probably over 10 years now. He has proposed this thing called drive chains, which is his solution to the security budget problem. Security budget problem is that Bitcoin's getting used less and less, so there's less and less fees going to the miners. And if there's less fees going to the miners shut down. The less miners we have, the less security there is on Bitcoin, and you get into this kind of spiral of death, basically, where no one's securing Bitcoin. So 50% attacks become more viable, et cetera, et cetera. Paul Stortz has just says this is a problem, and to be honest, I kind of agree. I don't love the way we're going right now with the Bitcoin fees. At the moment, it's not such a big deal because we've got the block reward, which kind of offsets by far any of the fees that are earned. But as you know, the block reward gets halved every 4 years, it becomes more and more important that we have decent fees for the miners to keep them interested and keep them actually profitable. The drive chains idea is a way to fix it. So it's a way to create like side chains on Bitcoin, and these extra side chains generate their own fees, and those fees kind of go directly to the miners without the miners having to do anything, which is the important part. So someone who's interested can set up their own drive chain. Miners don't have to sit there and research and figure it all out and blah, blah, blah. They just sit there and continue mining, and through this blind merge mining process, they earn the fees. Paul Stortz has been trying to push this drive change thing for a long time now, many years. And recently he's finally got the shits and said, look, no one seems to be interested in doing my thing. No one's got any reason not to, as far as he's concerned. I haven't looked into it super deep technically, but as far as he's concerned, no one's provided any reason why not to. So he's decided he's going to go out on his own and create a fork of Bitcoin, which includes drive chains. So his proposal is essentially that it's going to be exactly Bitcoin. There's going to be no changes except for two things. One, the drive chains soft fork code is going to be enabled on this eCash thing. And two, to try and generate a bit of interest, he's picked, I think, 50% or something of the Satoshi era wallets and said 50% of these coins gets distributed to anyone who's like interested in helping me build this project. So he's, and people are sort of calling it he's stealing Satoshi's coins, right? It's quite like a salacious title there, but I mean, the reality is it's not Satoshi's coins. It's in a fork, an eCash fork of Bitcoin. He's not even trying to call it Bitcoin fork or something. He's changed the name completely. He's like, look, I'm not trying to... Yeah, Stortz coin. He's keeping it separate to his credit and not trying to sort of do any kind of affinity scam. But yeah, this is the general idea. Has anything happened? No, I think there's something like 60, 70 maybe days until the date of the fork. So at this point in time, I'm guessing Paul Stortz is just doing his best to try and drum up as much attention to this chain as possible. The worst thing that can happen for him is, you know, attention dies out and no one listens to him and everyone just forgets it's even happening. He needs to do his best to try and, you know, keep everyone talking about it. As far as I'm aware, nothing's changed. He's just proceeding ahead with his plan. Yeah, if he was making changes to the protocol design now, I think it's probably too late and people wouldn't take him seriously. This kind of thing, you know, you need to figure out ahead of time and then present your plan and stick with it. But yeah, sorry, to answer that in a long way, that's the answer.
No, now answer in a short way, because I believe you went the long way first.
All right, so the short way is any word? No.
We could have started there. No, that's, well, hang on, I bet you, were you expecting that? That was quite a comprehensive answer. I mean, you should be charging for that kind of stuff. That is the full brief. All right, so quick crossover to some questions here from TikTok. So six sticks? Kicks six? Not sure. Anyway, thoughts on AUDD stablecoin. All right, I'll jump in there. Skynet, also, please feel free at any point to jump into this. Now, my thoughts on AUDD stablecoin. So we know the team from AUDD and Navati. They've been kicking around for quite some time. There are, I guess, 4 probably major stable coins right now. Australian dollar stable coins is AUDD, AUDM, AUDX, and AUDF. So I think, you know, if I was being candid, so AUDD is maybe a little bit different to the other ones, and it's primarily deployed on Stellar, I believe. Correct me if I'm wrong.
No, they're on Stellar. They're on like multiple chains.
They're on multiple chains. I think they're on multiple chains anyway. Yeah. But
They're
point
on
being,
Stellar, XRP, Ethereum, Solana, Hedera, Base, and Red Belly.
awesome.
Wow,
Thank you. Yes, that's why we had you, Skynet, because someone needed to clarify. Thank
It's
you.
because I've got their transparency report up in front of me, that's why.
Oh, good.
13.3 million total liquidity.
Yeah,
33.
On
I think the
13.3.
Are you
Yes.
ChatGPT?
No, I'm human.
You
ChatGPT
give
would say
correct
that.
answers. So.
Yeah.
Yeah, so I think, look, the thing with the AUDD stablecoin, like any stablecoin right now, the big question is, well, who's going to mint it, who's going to use it, who's going to hold on to it? All right, we have the question in my mind, like right now, as we all know, USDT in particular is the most prevalent stablecoin of any kind. And there's a huge race on for just competition just for US dollar stablecoins. So if you head down the list of, I guess, demand, then at some point there's going to be some demand for AU dollar stablecoins as well. So the big question is there enough room in the market and demand in the market for people who want to mint these Australian dollar stablecoins, other than people who are just using them for proxies because they have trouble getting banking or something like that. That's being super candid here. And I think there is a space for them. I do think there is a space for them. Right now, you know, if I look at those particular projects, I think they're all good projects. And, you know, whether you're choosing AUDM or AUDX or AUDD, they're all reputable businesses and the good projects and all that kind of stuff. But in terms of how they will perform over the long term, I think it just comes down to demand, right? And right now, I think there is some, I think I can call it nascent demand. It's not overwhelming. I mean, all those projects are looking for market fit, where they're going to get the most demand from it. I think it's probably a fair way to say, you know, they're all starting out. But I think there's going to be room for it, but I think maybe the rails into how people get those stable coins, and I guess the places they're going to take those stable coins is still being built out.
They need some killer app. They need something that really kickstarts demand. I thought it was interesting. Like, can you name 4, or let's say 5 US stable coins?
Well, USDT, USDC, RLUSD, USDE, is that one?
Athena, it's a bit different, but yeah.
And did any of the banks, like, I don't know, Bank of America or someone issue one?
See, like, I feel like, you know, and to your, I think I'd be the same, like struggling when you get to sort of 4 or 5. We have 4 in Australia. That's a lot, right? Like, the competition for the Australian stablecoin market is tough.
That's a great point.
Because no, I mean, there's lots more. We've got DAI, we got...
DAI, of course.
There is actually quite a lot. There's like
DAI's now Sky Money,
FD
though,
Digital, there's a number of
And that's Maker.
USD ones, but like in terms of, you know, it's a long tail, right? Like, and they're all kind of tiny.
I totally forgot about DAI. That's called something else though now.
USDS. Yeah.
USDS, yes.
Yeah.
And then
There's a question again from Six Sticks, and he's asking about RLUSD, and asks, does IR have any intention of bringing RLUSD to the platform?
That's, well, Six Sticks doesn't obviously know Independent Reserve very well, because we've had RLUSD on platform for a long time. In fact, I think we were one of the first places to list it in the world. I think there was maybe, I'm going to say like 3 exchanges that listed it all at once when RLUSD was launched, and we were one of them. So yes, we do have plans, but those plans were actually a long time ago.
oh, right. Thanos. I love Thanos. Came for the Lambo, stayed for the revolution. We don't have a choice,
Yeah,
I guess.
that's right. Yeah.
Like the rest of us.
If you don't sell, you haven't lost anything.
Like Jared.
Wow.
It wouldn't be a regular episode if I'd gotten stuck in your Cardano once. Your ADA, sorry.
I sold a long time ago. What are you talking about?
Now, as advertised, I promised you ratios, so specifically the Shiller P ratio. Oh, I can't wait for this. This is going to be amazing. So what is the Shiller P ratio? I hear you all asking to the internet.
never did.
What? And why does it matter? Well, actually, I'm going to take us all back on a little history tour back to the 1990s, the late 1990s, when there was a little thing called the .com bubble raging. I guess it wasn't called the bubble then; it was just called the tech boom.
Sure. Yeah, it wasn't a bubble yet.
Only in hindsight. Now, at that time, I don't know how many people are old enough to remember this. I wasn't even old enough to remember this. I had to just do my research. Warren Buffett was famous, now quoted for like staying out of it. Barron's, you know, the Barron's Weekly was saying, "What's wrong with Buffett?" Like, and he was just, you know, basically everyone was piling on him, saying he's missing the boom. His fund, Berkshire Hathaway, had underperformed for a couple of years in a row, while everyone else is getting rich. But at the time, and he was obviously vindicated after that, because he famously sat on the sidelines with hundreds of billions of dollars worth of cash, missing out on what turned out to be the .com boom, .com bubble. Sorry. Do you know what the Shiller P ratio was at that time?
No, I don't. Please tell me.
At the peak, it was 44. Astute listeners, where are we now?
42.78.
Now, here's where it gets you a little bit interesting. So what is the Shiller P ratio? In really simplistic terms, what it is an attempt to measure the price to earnings ratio, but on a kind of averaged out over 10-year basis. So it kind of goes, you know what, over the course of 10 years, we appreciate there's going to be, you know, market fluctuations and cycles. So we try and get the valuation over a broader period of time to get a more of a fair comparison of where we're sort of sitting. Now, look, that last peak, that was the .com bubble, which Warren Buffett famously sat out. All right, so what are the analogous points man, I'm really struggling.
I'm really interested in the 1930s bubble. Was that like a washing machine?
No,
Craze?
we spoke
that was
about
the great.
that
That was the Great Depression. That was just before the Great Depression. The
Oh, okay.
1920s stock price.
So that was the 20s, right? But like to the end of the 20s and 30s, we spoke about this a long time ago when strategy first became a thing, and there was this. So the idea behind the treasury, the treasury companies going out there and buying this asset and putting it on their bank sheet, and then buying more and kind of creating this self-fulfilling prophecy. That same thing happened back in the late 20s, and I reckon that was probably that big bump there.
Yeah,
and then like after that happened, and that big crash that happened after in 1930, early 1930s, that was when a bunch of the SEC regulations came out to stop that kind of stuff happening again, because people were just doing like completely unrealistic things. Sorry, to go back to that, can we just go back to that Shiller ratio? We've lost it.
And okay, so I'll add a little bit more context into this. So you go, okay, great. Well, look, the PE rate, this PE ratio is back up to where it was. Now, there's probably a few little differences between the .com bubble then and whether it's a bubble now. Look, I don't know. We've got AI right now. We've got a few other things that are definitely keeping the market up, but we also have some tech titans that are genuinely producing cash flow. Now, back in the .com bubble, I mean, it was all built on hopes. You know, there was a lot of businesses out there that was like, and I guess the question at the time was going, Warren Buffett's an idiot because valuation has changed, man. Right? It doesn't matter about actual cash flows and stuff. Just things are just different, right? This time it's totally different. Like these businesses don't have cash flow, but you know what? The internet's here and it's going to be great. And that's what kind of drove those crazy valuations back at those times. So the question is it the same or is it a bit different this time? Because I know obviously there's a lot of value. We have, what do they call it? The Magnificent Seven, Amazon and Facebook and those ones. They are generating genuine multiple $100 billion profits year on year out. We have the AI boom, which potentially is stretching some valuations, but this is the question, right? This is the big question. So is this time actually different, or are we just kind of seeing the same thing again?
I mean, isn't that the specific reason for this, the PE ratio and the Shiller's PE ratio, is that, yes, they are stretched. Like this is a direct measurement of how stretched the things are, because if you have a high price to earnings ratio, it means the prices, for your stock are way over what you're earning. So yes, they are, they're earning stuff, but they can't be earning that much because look at that PE ratio. It's way too high. I don't know. This is, sorry, Jared, if we just throw back to that PE ratio, I know where everyone's loving it right now. What I wanted to point out here, and I might be way off base, but if you look, so on the screen there, you can see a faint line just before the .com bubble, which is around, and we've lost it again. Which
Jared
is
hates that
just
graph.
Sort of
He can't wait to
he
get it
just
off.
wants to get rid of it. Just sort of early 90s there, you see that line. So 1992. I'm going to say 1992 is kind of when the internet started taking off, right? When I was a kid, that was about when I first started using the internet. I might not have even had it at home, but like my mates would have had it maybe, or I would have known someone and we would have mucked around at it and downloaded some websites or whatever using Alta Vista or Netscape Navigator or whatever it was. That was kind of the start. Now, if you look before that line, before that 1992 line, I reckon the average is pretty flat, right? We're sitting at about 15 forever. Yes, there's troughs and peaks and whatever, and it goes higher and it goes lower, but it sort of seems like we're around 15 for a long time. How long is that? Like 100 years, where the PE ratio is about 15.
A long time.
After 1992, like that's just, we're starting in an up-only mode. And, am I wrong? But I'm probably wrong. But but to me, I'm like, okay, we've invented the internet. We've started, the technological advancements have started becoming exponential.
Yes.
And we are doing some crazy stuff. And yes, PE ratio by definition says things are overstretched and need to come back down again. But as you say, maybe it's time we start re-rating this stuff, and maybe things, I don't know. Maybe this is another bubble and we head back down to 15 again, or under 15. But if you look at the trend from 1992, we've now suddenly started going up, and the average is closer to like 25, 30 instead of being around 15. Yeah. So maybe this is just like the human race is now becoming, I'm going off on a tangent here, the human race is just becoming more productive, and we're doing these crazy things with the internet and technology.
Look, I mean, I'm sure everyone can talk about how much productivity gains people are gaining with Claude, right? For example. It's just insane. It is insane. Yeah. But maybe you're right. I mean, 1992 is a fundamental shift in how humans do business and share information and all kinds of things.
Yeah.
So maybe you just cracked a really interesting code there.
I mean, the PE ratio is going to be like forward-looking, right? So it's not what we're doing; it's what people are expecting us to do, because it's how overvalued companies are.
Or are we just falling in the same old trap of thinking this time it's different?
Yep, another very valid option.
Don't know.
Any thoughts, Skynet?
No, not really. It's I think you're using a method that was established in a time that's very different to now. And so you've got things now like accounting changes, share buybacks. These things all change how the baseline on these things. But I don't really have a good take on the Shiller PE ratio. But I'm glad you did bring up a topic that will rival Nick's quantum.
Oh, wow.
Nick's got one that will put you to sleep, and now you've got one that will put him to sleep.
The world loves ratios, I'm telling you. The golden ratio, the Shiller PE ratio, whatever.
It does go. One thing it does suggest, though, is that there's this constant doomerism online about we're almost at a top, and Michael Burry seems to be the type of person like this. He's famous for The Big Short, and he's out there saying AI is overvalued, and he gives you a laundry list of reasons why, but it just keeps pushing higher. So there's this old adage that what's that thing? A clock is right once or twice a day.
Twice a day.
A broken clock.
Yeah.
Right.
Broken
And
clock
so,
is right twice a day.
or the other one that's a bit more spicy is people say this person's predicted 46 of the last 2 recessions.
Exactly. Exactly. Yeah. And look, the fact that it's expensive now doesn't mean it can't get more expensive, right?
Yeah.
So, all right. That was amazing because everyone loved that. But importantly, there's still more to talk about the Shiller PE ratio, because Shiller, who tremendous bloke, old mate of mine, he also had a guiding influence on another topic that we have just been discussing, which is the Perps market, I believe.
Yeah, so this not just a guiding topic, this guy invented it. So back in the 1990s, like the early 1990s, he decided he was going to invent a new way to do futures markets. So prior to that, I'm going to rival your PE ratio boring topic with the perpetuals. Now, this is something I thought was quite kind of interesting, because prior to BitMEX, the idea of a perpetuals market didn't really exist. If you look back far enough, so to the 90s, the guy who invented perpetuals was the same guy who did this PE Shiller ratio. Is Robert J. Shiller, is like 80 years old now. He's like a Nobel Prize winner for economics. He's doing everything. He's a pretty good guy, pretty impressive guy.
Robert Shiller, can you get a photo of him?
It's too hard.
I don't want to touch anything.
Oh no.
Yeah, so this guy's done, as you say, done a lot. I thought it might be interesting to talk about perpetuals markets and how they work. So, a futures market, which is what it's based on, is the idea where you're kind of predicting what the future price of an asset's going to be. So, a futures market always has an end date. So you say, like, in 6 months' time, I think the price of wheat is going to be, $7 a bushel or whatever, and I'm going to place my bet. And then when the 6 months' time, like when that comes up, you kind of have to settle with the bushels of wheat. So you go, okay, I thought it was going to be $7, it's now $6, and you pay the difference. And if you're right, you win more. Blah blah blah. So if the price is higher, then you win. If it's lower, you lose. Perpetuals market is the idea that futures is cool because you can do some trading without actually mucking around with the physical underlying, wheat, but you don't want to have this end date. You don't want to have to settle at any point. So the idea behind a perpetuals market is it's a futures market with no end date. How does it stay in line with the price, you ask? Well, that's a great question. And this was the kind of thing that old mate Shiller had to solve. So
Shiller again. Yeah, every time it's this guy.
This is the whole thing. He has to figure out, okay, how do we do a futures market where there's no settlement? Because the settlement is really the anchor in time. It's the time where you redeem the goods for money. Whereas in a perpetual market, you never do any redeeming. It just goes on forever. So how do you make sure the market stays in line? So this is where he invented a couple of things. One was the funding rate. So funding is if the price is too high above the actual rate of the underlying asset, then it becomes expensive for the people who are buying. And if it's too low, then it becomes expensive for the people who are selling. So it kind of forces it in line. And what was the other way you do it? So I've written some notes here, but I've forgotten. And the indexes, the index price, so the underlying price is linked to liquidations. So you will get punished if the price is too far out of what the actual index price is. So yeah, it's a pretty cool invention. It didn't really get used anywhere. It was just kind of this academic idea that existed. And then there was a Bitcoin inverse perpetual market created in like the mid 2010s, I think. But really where it exploded and it's just become this thing now that exists in the market was when BitMEX did it. So again, for those who don't know, BitMEX was this massive futures market for Bitcoin. There are claims, and we can do like a little history lesson here. Maybe Skynet knows more about this than I do, but back in the day, there was this huge liquidation event, and BitMEX turned off their servers. They basically shut the market down because they knew that if the liquidations kept happening, it would be an actual problem for Bitcoin price because the perpetuals, forces the real price. Like they're both in tangent, right? And this thing was just going too low. And so they were like, you know what, we're going to shut this thing down before anything crazy happens.
Really?
Let the market settle and then we'll turn it back on again. And it became a real big problem, right? Because they were kind of manipulating the market in that way. So in one sense, people were like angry that they suddenly can't trade, price of Bitcoin is dumping. And this is happening back in like 15 or 16 or something. It's a long time ago. The price was dumping. Things were getting really bad. People wanted to get out of their positions, and they turned the servers off. But the reality is, the alternative was potentially worse, where Bitcoin could have gone down to such a low level that people were just like, "This thing's dead."
Yeah, well, right.
It doesn't exist anymore. So it was this weird kind of piece of history where Arthur Hayes, who like spent some time in home jail, I believe, for his actions during his tenure at BitMEX. Actually made this call, like it was a big deal call, where he's like, you know what, we've got to do something drastic here, or we're like the market is in a lot of trouble. And like in traditional markets, this stuff exists, right? Like you've got what are they called, short circuits, right? Like where the market moves too fast, it goes, it's moving in one direction too quickly, and you have a short circuit protection which kind of stops it from doing that. He kind of just manually did this, with the
just turned the switch
like,
off.
I'm gonna just yank the plug out. I was like, no, thank you. But yeah, it was interesting. Anyway, the perpetuals were kind of first really used on BitMEX, and these days, they exist in Hyperliquid. Obviously, BitMEX is still around, but Hyperliquid is taking everyone's lunch, and they're basically a market of perpetuals contracts that were invented a long time ago, but only really used in crypto. I always found that weird. Like crypto usually follows what traditional finance does, but in this case, they picked up this bit of technology, this thing that old mate Shiller invented back in the 90s, and go like, that's a cool idea. We could actually make use of that here.
Absolutely.
Has this guy spent his entire life promoting his ideas? Would he be
Well,
shilling his own ideas?
Yeah, very good.
Well, he's an academic, so I guess I remember reading about the Shiller P ratio in finance class in uni, but I don't know. I don't think so. It was like Nick said, it was kind of confined into academic textbooks and a theory, but it was never really done in practice.
Yeah, I looked up his net worth actually, just coincidentally. Doesn't look like he's very rich, so he's got like maybe $1 million to his name or something like that. Like he's not, he's okay, I guess, but he's not mega wealthy. He hasn't sit there and used his PE ratio to trade and make squillions.
That reminds me of something I've just recently seen, and it's an American talk show program where they bring on people who have got financial troubles, and they're really blunt about how they're going. And it was this older man, he would have been maybe late 40s, marrying a 26-year-old person straight out of university. She had $120K in debt, and he had a net worth of about $600,000 with his IRAs and properties and stuff like that. And he was asking the host, should I get a prenup? And the host just laughed at him and said, "You're not worth enough." And then just laughed at him, and then they moved on to an ad break. It was great. Anyway.
So she's just out of university at 26. Was she like a doctor?
A nurse, I think, yeah.
Wow. Like that's a lot of university. She's either not doing very well and failing classes and having to retake them, or she's doing some
4-year course took 7 years.
Yeah, or she's doing a big course. Yeah. Yeah, fair enough.
What about Iran?
Iran.
Yeah, those guys love the PE ratio, I believe.
Huge Shiller fans, just like everyone.
Yes.
Yeah. In fact, I'm pretty sure that's why negotiations are broke down because the Iran just said, mate, bring Robert to the table or we ain't talking.
Yeah.
You heard it here first. That's,
Yeah, what about Iran? So negotiations are broken down. Trump, I hear, has said he doesn't care anymore. And then in the next breath, he said the negotiations are going really quickly and well. So just classic Trump moves. No one listens anymore. It's bearish times in terms of like macroeconomic views, I think. You know, previously we've always got some kind of nice thing on the horizon. But right now, as far as I know, we've got a bunch of ceasefires, but there's still missiles flying. So I can't wait to see what it looks like when there's no ceasefires. Like, if this is what a ceasefire is, it's going to be some bad news for
We
people on the
also
ground.
touched on our newsletter the chances of clarity going down.
I heard
the odds are down to
Skynet
55%.
talk about clarity as well, and I threw up in my mouth a little bit because we promised we'd never talk about this again.
Maybe we can technically skirt us talking about it by asking Skynet to talk about it.
Yeah, through a technicality, but
Please don't. You've done it to death.
I'm not
I agree with you. Let it be.
yeah. Anyway,
Are you trying to say this is not the most important part of our weekly broadcast?
How about strategy? That's the topic everyone wants to hear about.
yeah. Yes, let's talk about strategy.
Strategy indeed. So Michael Saylor, how many times, unlike Labor, who promised they'd never bring in negative gearing, did Saylor ever come out and said, I'm never selling? And how many times did he say it?
I'm sure. I don't know how many times, but like in the story we've got here, it's sort of, he said you should sell your kidney before selling Bitcoin kind of thing.
Well,
which
maybe.
is,
But I doubt he sold his kidney.
yeah, exactly.
Well, this week he has come out, and look, you know, there is some precedence here. Look, markets get to the jitters when, like, titans of a particular industry change their tune. Berkshire Hathaway famously sold some Apple position back in 2024, and after of course calling it one of their best investments, and then the stock took a tumble, brief, even if slightly, because people were worried, oh, Warren's doing something.
You lose faith. Yeah.
Right. Now, Strategy sold just 32 Bitcoin of the 800. Let me say this out loud: 843,706 Bitcoin stack. They sold but 32, a tiny in absolute terms, but enormous in symbolic terms. So this has been framed as supporting their yield preferred BTC stock, I believe, and part of a broader balance sheet management move. But what's your take on this?
So I saw an interesting idea about this one. Jared, if we've got my photo of the three body problem. So someone's describing this or likening this to the three body problem. So if those who don't know, three body problem is this famous kind of physics parable or riddle almost. Or not riddle, it's just the concept where if you have two bodies in space acting on each other with gravity, it's fairly easy to predict how they will move. But the second you introduce a third body into it, it's essentially chaos. The third body makes all of these weird things happen, and suddenly it becomes extremely complex to try and predict where these three bodies are going to move next. And Saylor's kind of got this three body problem with the way he's set everything up. So his three bodies are the MSTR equity, so that's the price of his strategy stock called MSTR on the stock exchange. His Bitcoin stack, so that's obviously what underpins his whole business, the actual physical Bitcoin that he owns, and his preferred debt stack. So this is the STRC, and there's another one, I can't remember what it's called now. His like these yield bearing offerings that he has. So he's got to somehow hold up all three, but the fact is, to hold up one, he's got to knock down another. So he's got this kind of issue here. The general solution is, and we can probably get rid of that image now unless anyone wants to read it more, but the general solution is, he needs a bunch of cash to underpin the requirements of his business. So the yields, if he wants to buy Bitcoin, he needs cash. If he wants to pay the yield on the STRC, he needs cash. And if he wants to show the market that he's got a business that runs properly, he needs to show that he can service those other two things, which will in turn allow the MSTR stock to go up because people have faith in the business. So he's really struggling at the moment with the way the price of Bitcoin's kind of going down. He's opened himself up to all these other instruments. So back in the day, he didn't have the STRC, so it was a much more simple problem. But now that he's got these three things, it just becomes much more difficult for him to juggle. And one of the big issues that he has is that he did, and we've spoken about this one before, he has this sort of cash buffer, and it was something like $1.4 billion. I think it was up to like $2 billion more recently. But he doesn't like money. He doesn't want to have money sitting on his bank balance. He wants that in Bitcoin because he thinks money is just a dead weight on his balance sheet, right? So it's this weird kind of pull and push from either side. He needs this latent cash to service this three body problem, but he doesn't want this latent cash because his whole ethos is about
Keeping
Bitcoin
in Bitcoin.
is everything should be in Bitcoin. So he's in this struggle street at the moment. As you say, he sold 32 Bitcoin, which is dust, and obviously for anyone who's looking at this realistically, this is not a big sell at all. This is an ideological kind of idea that he's brought in. He's telescoped to the market a few weeks ago that he was going to sell. So he's kind of prepared everyone for it. He's gotten everyone ready. It's not this surprise thing. And then he's come in, sold his little bit of Bitcoin to show that he can do it. The thing that I found interesting here is that so the S&P have these two different bodies. One is like a group that decides whether you get in the S&P 500 or not, kind of thing, and they have their own sort of process. There's this other group of S&P called the Innovation something. Oh no, what's it called? I can't remember what it's called now. Governance something or other that looks at credit worthiness of companies. And one of the things, so obviously strategy is trying its best. It wants to be in the S&P 500, right? Because if he gets in there, then it's suddenly everyone's a forced buyer of the S&P, of the strategy shares. But it's not there yet due to, in technicalities. So it's big enough to be in there, but there's a couple of technicalities. One of the things that the credit rating part of S&P said about strategy was that one of the weaknesses is that he's said he's never going to sell Bitcoin, and that ends up becoming a weight on the business because if you can't sell, then what's the point in holding it? Like it's pointless holding this asset. You're spending all this money buying that you're never going to realize the gains on, and so this kind of people are sort of looking at this and going, okay, he's trying to appease the S&P group and say, look, no, we aren't a weak business. This isn't a weakness of ours. We can sell if we want to. I'm not sure if that's really where it's going. I think he does actually need to sell because of this three-body problem, and so he's just trying to ease it into the market and go, look, I can do a little bit here. Look, we're not, this is not the end of the world. He spent a bunch of his cash buffer buying back some of his preferred debt at a discount. So he's used up a lot of that. I think it was up to 2 billion at one point. It's now down to 800 or 900 million. So he's used up a lot of that money buying that stuff. That's probably my take on it. I think it's a difficult and complex situation, and he went from juggling two things, which was the MSTR stock price and Bitcoin, and now he's got 3 plates up in the air, and he's constantly trying to service each one and make sure they don't fall over. And that was me spinning the plates in the air, by the way. Just imagine there's poles here and here, and yeah, cool, nice. Yeah, in post production. So he's got a tough situation ahead of him. He's got to figure out how to make this thing not fall over. And as soon as Bitcoin starts going up again, it's happy days for him, right? But right now he's in the depths of this bear market.
I saw a post on Twitter saying Michael Saylor selling 60 Bitcoin, 32, well, even less, when he's got a pile of however many 100,000. Is kind of like converting all your old meme coins to dust just for USDT for gas. It's nothing. It's a drop in the bucket.
Yeah, but as I say, it's not about the money. He wasn't raising money. He's more just raising the idea of being able to sell. And look, he does actually have a sell button. Everyone thought he only had buy buttons on his computer, but now actually there is a sell button there. Yeah, and can happen.
Well, I mean, this bear market, right? This is bear market vibes. There's lots. We all know it's a bit of a bear market. In fact, Glassnode came out this week. It's another article I'll segue into, mentioning that recent buyers are slowly capitulating. About 40% of Bitcoin holders are currently underwater. Right.
Yeah, that was one of the most bearish articles I've ever seen. It was like paragraph after paragraph of new reasons why you should be bearish and we're all going to be poor. I was like, oh man, I just had to stop reading. Well, it's too depressing.
Historical halving cycle data is inconclusive, let's put it that way. But, in 2012, here's some stats I pulled up. In 2012, the cycle bottomed at a similar point to now, right? The amount of people. But in 2016 and 2020, when I crunched the numbers, the cycle meant that we kind of had a few more months to go. Now, Tom Lee has come out. So Tom Lee, if nothing else, Tom Lee is optimistic. Is he not?
Perpetual.
If there was a Perps,
Yeah. Perps of his optimism, it's up
his
only.
optimism, it's up only. Now, all right. So what did I say before at the beginning? ETH was down 5.2%. But Tom Lee has come out there, and this is my quote from the week: "Crypto winter rage quitting." That's it. He said, "We're done with the crypto winter because it's just people rage quitting at the end." Others are floating a short squeeze, apparently. Now,
This is cope. Have you ever seen it?
isn't it? Hey, look, it's a bit of cope in there. It's a bit of cope in there. But you know what? If it considers Bitcoin or something like that, anything in the commodities, there is always boom and bust cycles in commodities. And after every boom and bust cycle, we see people asking the question: is this just typical market volatility, or is this a structural change? In 1986, for example, and I love my historical analogies. Do you know what happened in 1986, Jared? Not you weren't born. You weren't born then. Were you born then? Was that the year you were born?
Yeah, I was barely walking, but sure.
Do you know what was going on in 1986?
Duran.
Probably, yeah, probably. There was an oil crash. There was a massive oversupply of oil, and price of oil back in 1986 crashed from $36 a barrel down to 10.
Wow.
Right? Huge oversupply. Of course, it had massive implications for oil-producing countries, but not so bad for, I guess, countries that depended on it. Which led people at the time to say, they ask the exact same question. And, was this a structural change, or was it, people just don't need that much oil anymore? Like, we just have too much oil. Well, you were asking about Iran. Fast forward. I mean, admittedly, it has been 40 years, but we are still structurally very dependent on oil. And the price is sitting around, what is it, $90 a barrel now?
More, I think.
Well, doesn't the price dropping to $10 because of supply suggest that the world's oil cartels are keeping the price at a particular price?
Oh, maybe they just can't get it out of the strait. It's called Hormuz. I don't know. But it's a good question. I mean, the point is, maybe. I guess my question is really, like, these structural questions, how apt are they? Skynet, I know you've definitely got thoughts on this.
Well, how weird is it that we've, in the space of 5 years, gone from record oil to negative priced oil? If you remember that in 2021, oil went negative because there was nowhere to put it. And apparently you can't just shut these valves off. They must continue to flow. Otherwise, it takes a long time to restart them. So, yeah, wild swings.
So, I guess the analogy there is that, look, crypto's like anything else, it's volatile. Like, is it structurally changed this time? Probably not. And if it's not structurally changed, why all the panic?
I mean, you did talk about booms and busts. Can you point at the last boom in Ethereum? It seems to be a one-way market.
In 2021, I believe we hit 6,000.
Kind of has little blips every now and then, but
there was a boom.
Yeah.
It just doesn't seem to be following the similar path of boom and bust, just mostly once a boom, then a bust.
So, yeah. So talking about Ethereum, Jeffrey Kendrick is a guy from some company called... Do you have that article?
So what was his name?
Jeffrey Kendrick. He's
from Standard Charters.
Standard Chartered, that's it, yes.
See, look, I did the research this week, Nick.
Yeah, thank you.
That's all right.
Because I have one throwaway line from this. But he's very bullish on Ethereum. Or at least he's trying to buck the trend, and he's saying that, it's not me, it's you, and it's Ethereum is like, it's gonna come good, don't worry guys, trust me bro, kind of thing.
He did say trust me bro. In fact, you know what he compared it to? Amazon.
Yeah.
Oh man,
right.
I dug into Amazon as well.
Okay.
Everyone loves Amazon now. Everyone knows. I don't have to tell you the story of Amazon. Nick, what were you doing in the early noughties? Amazon fell. Okay, so again, I did my research this week, Nick. Good. There we go. Amazon fell 94% from its peak through its trough in 2000 to 2001.
Is that because were they only selling books back then? Was it back at OG Amazon? It was, right? That was way before AWS.
Yeah.
Yeah. So they were just a book company.
Yeah. So yeah, you're quite right. So Jeff, big old Jeff, he's come out and said he compared ETH's current position to Amazon during the 2001 .com bust.
And we're not talking about Jeff Bezos. We're talking about Jeffrey Kendrick.
Yeah, the best Jeff.
That's
And
Geoff.
Geoff, sorry.
Yeah, Geoff.
No, there's no J on it. He's definitely a Geoff. So Geoff is saying he's targeting 4K by the end of the year. And guess what he's saying by just in a mere 4 years away?
How much?
30K.
ETH?
Correct.
Oh my God.
No,
I think he's posted 40K. in
Correct.
some-
Thank you. I misquoted myself here. 40K. Thank you,
You
Skynet.
misquoted Geoff.
Geoff, yeah, sorry, Geoff. Thank you for correcting that. Yes, 40K he's predicting by, that's 40K
That's
US.
wild.
2/3 of a Tom Lee who's predicting 64K.
Oh man.
Yeah.
So this is what my only comment on this was basically Geoff is Tom Lee with a wig. It's like Tom Lee's come in, put a wig on, and gone, "Hey guys, I'm from Standard Charter, and I think
there-
Ethereum's doing really well."
It's
Yeah,
good. There's Geoff.
if I had more time, I was going to mock up some Tom Lee with a wig image for you, Jared. But it was
Okay.
ran out of
Well,
time.
look. I hope Geoff is right about ETH. But look, if Geoff is correct and it is similar, do you know what?
What's the PE ratio on that, baby?
Well, since if you had have bought some Amazon from the original Geoff, oh no, he's a Jeff.
No, he's a Jeff.
He's a Jeff from actual Jeff.
Yeah.
If you had have bought it in that .com bust, you'd be up a lazy 100,000%.
What?
Yep.
100,000?
That's
That's what your sheet says. Yes, I know. But
Is that according to
Checks out.
Georg Santos?
that's according to. Well, what's it now? It
that's
got
amazing.
down a few cents.
100,000. Wow. Okay. Yeah, they were on death's door. Then I'm surprised they survived.
Hmm.
How did they do that?
Yeah, many did not recover though. So that's many
true.
did not recover.
True. Yeah, incredible story for Amazon.
Someone fact checked that 100,000.
That's a
Is
lot
there
of.
any
Run,
examples
run your calculator of it.
of companies that died during the internet com burst bubble,
Squillions.
and then
At
but
least.
then Lazarus their way back into a successful tech company later on?
Surely.
MicroStrategy.
One tel? No way.
Cisco.
Cisco. Yeah.
Yeah.
Strategy was around. MicroStrategy was around during the .com bubble.
Yes.
It's
Michael's
MicroStrategy.
It's like Michael's.
Old
There's
Michael.
this great thing, and maybe you can do it for the short. But one of my favorite memes is this Chinese store where they're selling bootleg copies of Windows, and on the it's a physical bricks and mortar, and on the window it says Microsoft Binbos.
Yes,
So good. It's my favorite thing, Microsoft. Anyway,
that's incredible. What was else around? Oh, my favorite .com stories was pets.com. Do you know what pets.com sold for? Just the domain sold in 300 million.
oh,
Because
just the URL.
just the
domain
URL
thing.
because
Wow.
at the time, okay, so it was a bit like the first time I ever used the internet. I remember going to a friend's place and he's like, "Hey, do you want to get on the internet?" I'm like, "Yeah." And he goes, "Well, I got to go do some. I'll set you up," because I was at his place. He goes, "I'll be back because I got to go do some chore or whatever." So he just kind of turned on the internet and went, beep, 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 beep. Remember the noise? And then but he didn't tell me I had to get on a web browser. I had no idea.
He's playing solitaire and shit.
Are you just typing boobs into a notepad?
Pretty much. Well, I pull out my calculator, like 58008, and then
Turn upside down. Yeah.
But like, I didn't know what to do. I remember sitting there. I was like, "Oh shit! All right, well." And then I'm like, I'm like looking at, looking at
Internet
tapping
activate.
it. Someone, and then I was like, "Oh, Internet Explorer." So I'm like, I should probably click on that, and I clicked on it. And then I was kind of like, I opened up my first ever web browser, and I'm like, where the hell do I go now?
Now what? Yeah.
Right? Where the hell? It's not like Google and stuff was around then. And so I just kind of was like, I don't even know. I can't remember what I did. I think I just went to the university homepage or whoever it was I linked through and be like,
Right.
this sucks.
Yeah, because universities were like the original internet sort of
Yeah.
providers.
Yeah,
and
so
backbones.
the internet was. So I went to we went through the local uni and I just kind of picked, they had a website, a real basic website, I guess, for whatever it was. And I think they had a really simple search function which allowed me to type in something like, I don't know, I think I typed in like Tiger Woods or something because I was into golf. And then, but there's hardly anything. I was like, this sucks, man. And I tell my friend, I'm like, internet sucks, man.
Tiger was two
This thing's
results.
definitely a bubble.
There's a couple of photos of Tiger Woods like swinging a golf club. There was no videos or anything.
Photos, please. You're lucky to get photos. Yeah, like half an hour later when they all downloaded.
Yeah.
All right, Thanos.
Oh.
What does Skynet think about the ETH price performance?
This is the first time we've ever had a commenter talk to another commenter. and
Yeah,
leave us
are
out of
we?
it.
Can we just leave? now?
Inception.
Like,
Commenter Inception. Well, I'm a ETH bull. I run ETH validators personally, so I'm obviously in it for the long haul, and it's been a painful 5 years of going nowhere. Long term, I don't know. You hear these predictions from Tom Lee and the guy you just mentioned from Standard Chartered, and they seem ridiculous. But when you look back at what the price has done, it's not even a hundredth of that price performance. So, can it get there? I don't know. You'd have to look at the market cap of what would it be valued at $40,000 in today's market cap, and does it deserve that? It would have to be hosting a hell of a lot of the financial infrastructure on top of it. So I think his predictions, they're all derivative of this wave of usage coming on top of the network. Whether that actually ends up playing out that way or not, hard to say. But,
yeah, I think like, to me, it seems inevitable because everything seems to be pointing at Ethereum. This is kind of what I've said for a long time. Like, I joke about the Ethereum price being so low, it can't go any lower, etc. But Ethereum is, there's a reason why everyone uses it. There's a reason why so much activity happens on it. The price of the ETH token doesn't seem to reflect that. And my sort of vague high level thinking about this is that, if you look in the past, what is ETH used for? Okay, it's a gas token. That's its utility. You can use it to do transactions on the network. And transactions used to cost a lot more. So people used to have to spend a lot more of Ethereum and used to have to buy it meaningfully to actually do their on-chain transactions. I remember paying like $100, $200 to do a DEX transaction back in the day, at its peak, and it was painful. But sometimes, if you're doing like $1 million trade for someone, what's $100? Like you just have to get it done. Whereas these days, because of the advances in the ETH's technology, things just don't cost nearly as much. Yes, activity is down a bit, but the active addresses are like, I remember last week, I think we talked about active addresses were like super
all-time high.
Yeah, exactly.
And the amount that's staked or validating on the network just reached its highest level ever, which is a third, so about 33%.
So Ethereum is scarcer than before. So much is getting staked. Obviously, at the moment, we're not seeing real burnbacks from the what was it, EIP,
the
59 or whatever.
The burn is, it's net inflationary at the moment, but there was a period of time where it was deflationary when you were talking about those high gas prices.
Yeah, exactly. And the deflationary stuff really requires that high gas price to happen. So because of these tech advances, we're probably not going to see deflationary ETH for a little while. There's going to have some serious activity happening on chain. But do you see that as a reason why the price of ETH just seems to languish? Because people just don't need to buy as much of it anymore because gas is so cheap?
I think a couple of things are happening at the same time. One is that Ethereum chose a scaling strategy of layer 2 centric. And so they allowed all these layer 2 ecosystems to be built up and essentially get, they ride for free. They weren't paying the security costs and they could attract all the users. And out of that, you've got base and arbitrum are the two ones that it seems to have succeeded. But at the cost of less or lower fees on the base chain. So the burn is not offsetting the new issuance. So that period where it was going down, the issuance was negative, deflationary, is over and it's inflationary. But they're correcting that now and they're going more with I think the theme they use in the developer calls is return to mainnet. Do all your transactions on mainnet. But I guess if you're a big financial institution like BlackRock or Standard Charters or Bank of America, what sort of uptime would you need to move your business onto that technology rail? Is 99.76 good enough for you? Or do you need 99.9 or 99.999? The only smart contract that has 100% uptime. And so I think the bets that Tom Lee are making and this guy that you mentioned before, they're just looking at the competition out there. Obviously, Bitcoin has its one primary use case, which is a store of value. But it's not really the greatest at hosting smart contracts. It's only got very limited ability. And so the only real option for these organizations is to build on the base chain.
That makes sense. I totally agree. And yes, the L2 thing was pretty interesting. They decided to scale with L2s, and then I think it was a couple of months ago, Vitalik wrote some long piece about how L2s shouldn't exist unless there was a specific alternative use case for them from memory.
Yes, yeah. He
So
wants them
there's-
to be less general purpose and more app specific. The way Hyperliquid is app specific.
Lighter. Yeah, exactly.
Or lighter. And just regarding the price performance, I think it's also a bit short-term weighted, because Ethereum's been around about 10 years. Bitcoin's been around, are we in year 16? And a lot of people say that Bitcoin's outperformed Ethereum, but if you look at it, if you had $100 to put in to Ethereum at the beginning of its network versus $100 to put into
Bitcoin, you'd be up 26x on that bet. So it has outperformed it, but that outperformance was weighted at the early stage of the network.
Sorry, can you explain how you got to that number? So, both were worth 0 at the beginning. So how?
No, I'm saying at the point in time where Bitcoin existed and then Ethereum.
Oh, I see.
Network,
Yeah.
The way that you acquired the Ethereum token was through Bitcoin.
Yep.
One Bitcoin equated
Yep.
to, I think, 2,000 Ethereum. So you have to look at the price of what
It was when you
had the one Bitcoin versus the 2,000
Yeah.
Ethereum
Okay.
that you
Got it.
got in there.
in the launch. So it had an early run that was that gave it most of its returns, and it's been sort of languishing, trying to solve the scalability problem. But I think it's getting there, because being a validator, you somewhat have to pay attention to the developments. You got to update your node, you got to run patches and things like this. So I follow that, and I think the gas is extremely cheap now, so it's preparing itself, and they're actually scaling it another 2 or 3 times over the next 12 months. So
Yeah, I definitely respect that. They could just stop doing work on this gas problem and probably make people pay more and, force the price up a bit, but they're not. They're sitting there, they're playing the real long game and saying, look, if we want to host, the entire world's finance system on us, we need to be as cheap as possible, as scalable as possible, as decentralized as possible. And so regardless of what this means for the short-term price, they keep shipping these updates that aren't great for it, but, yeah.
Jared, did you and I know we've got to wrap up soon because we have been going for plenty of time. So did we get a photo? That photo we had of Vitalik? If you didn't believe he was in it for the tech.
Oh, yeah. No, I didn't get it ready. I'm sorry.
Never mind. Because I know you're going to ask. Let's quickly do the Asia crypto roundup, and then we'll have to thank our guests and wrap it up. For the cameras. Should I look? Where do I look? Anyway, the Asia crypto roundup this week. So Standard Chartered's but this time not Geoff. So Standard Chartered launches its first institutional crypto custody in Hong Kong from a globally. Now start again. So Standard Chartered this week has launched its first institutional crypto custody in Hong Kong, which is its first from a globally systemic bank. And South Korean crypto volumes have collapsed. This is crazy. So they've gone from 23% of stock market volume in November, just in 2024, down to just 8% today. Do you reckon it has to do with tax?
Well, I mean, their tax is still so good. And it's not even... So the new tax regime, which everyone's complaining about over there, is going up to 22 or 23% or something, capital gains tax. Man, I wish we had 23. I'd be laughing.
You're laughing.
Anyway, yeah, those guys are real crybabies if they've stopped trading just because they might go up to... It's not even in, in full force yet.
And look, China is examining new judicial rules for crypto, and Binance is entering the Philippines via Black-Scholes. There's the roundup. All right.
We've got another comment here,
I've
actually.
got another comment.
Thanos, can I borrow your Lambo when you do the... Okay. That was another commenter talking to another commenter. And we've got a...
All right.
Jared's just doing
That's all
some
right.
fancy stuff.
We'll throw it there. But, all right, crowd. Well, should we go to this last comment and then wrap it up?
Sure.
And thank you very much, Skynet, by the way. Thank you for stopping by, first of all. It's been great to actually talk with you. We love it. We love that you're always here commenting and adding value to the show. It's really very appreciated, very much appreciated.
Definitely.
Yeah, and extra time for hanging around and talking nonsense with us.
Thanks for having me.
Really, really appreciate it. All right, what have we got? Last question. Wait. Ethereum is decentralized because you can do updates every 3 weeks. Really, really decentralized. I feel like that's not really a question. That seems a little more.
Yeah.
That might be a little bit more
Taking
rhetorical.
shots across the bow. but
You
yeah,
won't catch me this time.
Spelling of Ethereum there says it all, I think.
All right. Again, thank you, special guest Skynet. Really do appreciate having you around. That was amazing.
Thanks, fellas.
And
Glad to chat with you.
you've also become our guinea pig. Now we know we can do live crosses to people live on air. So you've just helped us level
It
up.
was a little bit more advanced than when we called you and just had it playing on the TV and hoping it came through.
And we will be back next week with hopefully not so many bear market vibes. What ratio will we do next, you wonder? Whoa.
Yeah. What's Shiller going to invent next?
Who knows? We'll see you next week. Thank you very much.
All right, see ya.
Lee and Nick with the